Hey everyone, I came on just a little bit early, so if, looks like there might be a few people out there. This is going to be a pretty historic event, and I'll wait till we start to get some users on. But if anybody has, if I could get a shout out from who's online so I can see who's out there, it'd be awesome. Testing, testing, testing. Testing. Hey, welcome everyone. Hey, Greg. Let me know if you're hearing this real time or if there's a delay. All right, think there's about a 30-second delay, it looks like. So we'll start a little chatter here. Looks like Bitcoin is up about 550, 600 points since the announcement of the Fed. So this is pretty historic, to say the least. So initially, the Bitcoin traders, which is the only market of any substance to be trading when the announcement came out, traded lower at first, and now we're seeing them trade higher. My guess is we come in higher, but I think once the dust settles, this may not be as positive as people think. Now, um, go ahead and talk a little bit about this and some of the things that I've been talking about on some previous videos is the massive dislocation of capital. I did about a 15-minute rant. If you haven't watched that video, that was for Friday. It was done Thursday night. It was posted, and that I went on talking about all of the levels of dislocation of capital that were occurring and how catastrophic it was. Well, the Fed's action today absolutely confirms just that. What they're and the question comes in: is this going to be really bullish, or is this just telling us that some major stuff has been derailed, and now the banking system is in trouble? I talked a little bit about the route that's going on in the bond market. I mean, that thing was out of control on Thursday, but on Friday, when the Fed came in, and made their announcement on Friday that they were going to buy all these trillions of dollars of assets, the market initially, the Treasury market downticked. Matter of fact, let's see if we can bring that up while we're talking about this. I just don't want to miss the opening. I think I'm just going to stay with this, but we'll talk about it if you guys will remind me to talk about and show you the. I don't want to get distracted and not be on this screen I just put up for you when it's time to watch these futures open. But I'll talk a little bit about it. What happened is the Fed, the 10-year downtick to about around 270, 0.75. And all of a sudden, the sellers came in again. And what was happening is the Fed, that was an announcement of what's calling buying all coupons. And that represents the Fed buying the securities, putting them on the balance sheet of the Fed. So they already started QE on Friday. And so this is an absolute panic move. And I'm not sure that this is going to play out real well. If you think about when they started TARP, let's talk about 2008. When they started TARP in 2008, initially everybody was like, yay, they're putting money in. If you remember, that literally was the beginning of the next leg down in the market. And there was a whole nother leg all the way down into April of 2009. So, like I said, this is such a unique situation. And I've talked to a lot of people on the phone, a lot of conversations. They all run together right now. But one of the things that has happened, they have shut this economy down. I just saw some announcements. I saw a couple of badges come through on my phone that they're shutting down the entire school system. And I always joke, I do have children, but they're mostly older, and even my grandchildren are close to 20. So, so the point is that I always call them little petri dishes, and they really are. They carry a lot of germs, and it's pretty amazing. But before we get into that, let's just pay attention here, and we're going to watch this thing open. Here we go. There's actually no trades have occurred yet. Interesting. First downtick. First trade is a downtick. And you can see these green bars in the middle. That's where the bid ask is, but there's no trades right now. So here we go. We're down almost 100 already. And as I was talking about, this is nothing more than an acknowledgement how screwed up everything is. Down 107 now. There have been 4,500 contracts traded. I thought we might get a little pop, but that's not what we're seeing so far. In real terms, this move by the Fed is an extremely negative move. And everybody think they got bailed out on that 9% run on Friday, think again. So there's, it's impossible to quote. Now the quotes are off the screen. It's 2602, which is down 94. Now, here we go. Now there's a little bit of buying. It's like the market's frozen here. We're not really seeing a lot of trades happen. The meter's over in, hopefully you can see my cursor here. The meter over here is showing you the lack of liquidity, which is what I expected. So now we're trading all the way at 28.45. Here they go. Now we were down 100, down 48. And Greg said the surprise acted today. This is an old tactic by the Fed. This goes back to Volcker days as well as Greenspan days when things were really screwed up. 87, Greenspan came in, I think it was about maybe 6 weeks, as much as 2 months right before the 87 crash. And this was the tactic: do things after the markets closed, and try to. It's a shock and awe kind of strategy, and so we don't. You can see the futures. Man, there's just not a lot of trading going on, and they're trying to get some sort of normalcy in this market, but we're just seeing literally 20 handle moves. There's a little bit of trading starting here. And if you look at the screen on the far left-hand side, you'll see there's just one contract too. This is an air pocket. There's nobody putting anything out there, okay? If you had some big money and you wanted to destroy the market, you put in 300 or 500 to sell here, you could knock this thing down, who knows to where. You could hit the circuit breaker. It wouldn't take much. And so you can see we're starting to see maybe a little selling come in here. Managed to trade 12,000 contracts, even though it doesn't look like it. On balance so far, it doesn't look like there's any a lot of buying coming in. So we'll this was not as exciting as I thought, but we're just getting started. We're back down 110 now. Looks like sellers are starting to finally come in, and we're pushing down. We're down 4% right now. Just to get some perspective, we traded down to 25.78, but once again, this thing's all over the place. The screen on the left-hand side is supposed to center at the last trade, but it's going off the screen, and it takes a second for it to center back. You'll see where the yellow blotch is over here. That's where the trading is. So that's where the last trade is. So we just spiked down to 78, and we're back to 04. So we did just about 40 handles here in a matter of seconds. So we'll watch the action a little bit more, but yeah, so the Dow futures probably are down. Let's take a look at those. Dow futures right now are down 588. There was a differential on the close, so that's probably about right, about 500. They're down 2%. The S&P is down 3.4, but that's not from something happened on right after the close on Friday. Is the Dow Jones? These numbers are from the close of the futures on Friday, and the market dropped about 2% in the last 15 minutes of the trade on the futures on Friday. So the market was already down 2%. So this is just a cumulative what you're seeing here. So yeah, so the numbers, when you see the numbers on the futures, are not going to reflect. That's 800 from Friday's close at, let's see, I can pull this up here. You can see exactly where we were on the futures on Friday at the close. The close was 27.03, and we're trading 25.96 right now. So yeah, it's just difficult to say. But let's talk about what's going on here. And there's, as far as a market reaction, like I said, we're looking at a handful of contracts, very light volume, that are trying to find some kind of price for the market right now. And there's not a lot of willing traders right now. So we were just up at 26.20, and now we're back at 25.88. So the point of what's going on here with the markets is this dislocation of capital. The 700 billion in QE that the Fed has proposed is, by the way, the same size as the original TARP that came out. And I already see that, President Trump says markets should be thrilled at the Fed's surprise rate cut. Then no, no, it's not a good thing. Just trying to find a story here that I thought was pretty interesting. So you guys have any thoughts or questions that you want to share? We've got about 24 people on right now. I'm just trying to find a couple of things, and we'll continue to unpack this thing. This is not a real healthy pattern that's setting up. Although if we can get some stability here, maybe this is all we're going to see. My expectation is that we could see some monster move. That's why I was getting ready to do my video. There will be another video out that I will do and thought, because one of the biggest things that I was going to be focusing, or I will focus in on tonight's video, will be actually the bond market. And this is exactly, they're trying to fix what's going on in the bond market. And I talked about the potential that there is a big seller out there, and maybe the big seller could even be China, could be selling their bonds. They're not very friendly, and they're certainly not, with everything that's going on in the world. Because of China, they've disrupted the entire planet. This isn't going to age well. They're not going to come through this in a very good way. And I suspect that there's a lot of countries, including the United States of America, that are going to see a lot of industries come back in. And yeah, I'll address that. That's a good question. He wants to know what I think the trading range for the next 3 months is. First of all, I'll just talk a little bit about that. First of all, we have to find a bottom. I don't believe we've done that yet. That we could be there. This is a bottomless pit right now, and all the Fed has done is confirmed that there's a serious issue going on. And they're also, and I talked a lot about this. Like I said, if you listen to the Thursday night video, you heard my rant talking about dislocation of capital. If this market stays down in these levels, everybody's excited about Friday's rally, but we didn't even get back to Wednesday's close. The way this thing's acting now, it looks like it just wants to collapse. Here we are, new lows. So we're starting to see some more selling come in. And, so the point of everything that's going on in this market is because of lack of liquidity. And that meter that's flopping all over in the histogram bars over on the right-hand side of the screen is showing you what the lack of liquidity really looks like. So it's going to be really, really tough to try to figure out at the moment. And just to go to Amit's question, it's going to be hard to figure out where to maybe try to enter the market or where the trading range is going to be, because we haven't established that low yet. And it's not going to happen. It will happen one day, the low will be established, but the structure of the market is going to be very important, and what the next setup is. And there is no setup right now. We'll take a look at some charts here. We'll watch this live trading here for a few minutes, and we'll go over and take a look at some other graphs. But, I would say market's not so excited at the moment. Now, we've seen these delayed responses, but I don't see, like I said, I'm stuck in a loop here. I don't see this thing as a real bullish event. And here we just punched out new lows again. So we're down 120 handles on the S&P. And yeah, it's very erratic. There's no way to quote this market. We're trading in 7-8 handle ranges. That used to take a whole day of activity to trade 10, 12 handles a day. Now we're doing that in 10, 12 seconds. So yeah, there's still, looks like the pressure's still on. Here's some new lows again. Pressure's still on. It's just a matter of, like I said, we've traded 36,000 contracts. And typically in the evening sessions, like last Sunday, I want to say we traded about 250,000, maybe 300,000 contracts. So we're about 10% of that. And now here we go on another little run again, running back up to the 2580s. And, this thing is looking like there's a pattern here. I know this chart doesn't mean much to you folks, but these lines that are in here are linear regressions, and I call these the WaveTech webs. And we're starting to see some crisscrossing of the webs, which tells us there's some potential for a bottom, not the bottom, but a bottom to form here in the futures. We'll know in the next couple minutes where they're going. And the bars that are coming up right now, they are 1 minute bars. So I'm going to spread these out just a little bit so we can focus in on these bars a little better. So let's talk. I know I've got a couple advisors that are on the call. Hopefully, I know one real well. Haven't talked to the other one know them both well, but the ones that have identified themselves. But hopefully you're in heavy cash. Should be. I know one is, and this is one of these events that it's okay to have cash. And we've been here. Here's some new lows again. We've been here before, back in '08, and these are the kind of things that you don't want your clients exposed to this. I mean, the amount of emotion that's going to come out of here, even if, no matter whether it goes up or down, the emotion is going to be huge. They're locking. I'm not sure what's going on. I was talking to one of my original partners that he may be watching, and we were just talking about how the numbers don't add up on this whole thing. There's I think 12,000 people have died from the seasonal flu right now, and for 100 deaths, we see the government shutting down virtually everything. The entire school system in the country is shutting down. Now, do they know? So two things to ask. Do they know something we don't know? And this shit's really scary? Or is there something else going on? Is this just a operational op to see what's going on? Who's willing to destroy this economy? I mean, we were talking just about an hour and a half ago. Is like all the metrics for the economy. Maybe the market was a little overpriced, but the economic metrics were just fine. Here we go, new lows again. Everything was just fine, and there was no reason to believe that the Fed would have to go to zero and add $700 billion and have things change that quickly. And what's the panic about? So it's interesting to watch this thing unfold, but the numbers don't add up to the reaction. I mean, we've got international air travel shut down. You've got segments of the economy completely shut down, and a lot of stuff is slowed down to a point that it might as well be shut down. I mean, I would not want to be a restaurant owner right now. Anywhere. People are just getting kind of crazy. Oh, I see what just happened, folks. If you look at my left-hand side of my screen, I thought, why is there a line there? We are down the limit. We're down. We've hit the limit breaker. So we may be able to watch something together. You see the very last tick over here on the far left, 635 contracts. They're trading at what would be limit down. And now what you see, there's 215 sells. I talked about this the other day. We saw this happen. This happened last Sunday night. And this is a sell pool and the number of offers out there. This has actually gotten to around 5,000 last Sunday night, and we're at 300 for sale now. Now it just came off, so somebody came in and grabbed all of those 300 for sale, and bought them up. So now we're off the limit, and this is kind of how we acted last Sunday night. We go down the limit because I was wondering why is this white line on the chart, and I've not seen that hit before, but we're already down. We've hit one of the circuit breakers, and the way the futures are working, like last Sunday night, they got down there and they stayed down. We've seen a couple bounces here, but the sellers come right back at this thing again. So this is not a positive event. Let's take a look at some other charts and we'll come back to this. We can still see what's going on. It was interesting because, like I said, this is a Bitcoin chart. This is a 5-minute Bitcoin chart. We saw a nice rally into here, so it went from 5,100 to almost 6,000. I think it hit 59.66, and now it's backing off. But a lot of these charts, let's just put the futures up here. You're going to see this. This is Friday's rally. We've all but erased that already. You know, we're almost back to square one. Not quite, but we've erased a big piece of this thing already, and doesn't look like there's a lot of enthusiasm to buy. I just want to look real quick so I know what the price is for the limit down. That's 25.6750. Okay. So when we let's take a look at, and let's go to the daily chart so you can see what this is starting to look like already. This is the futures. So, you know, I guess I over-exaggerate a little bit. We were down quite a bit more on Friday, but the futures have been an interesting view because I'm going to show you the contrast real quick while we're talking. Is that what we're looking at here is just a really backtracking inside bar. It's going to be interesting to see how this plays out, but I want you to look at the momentum meters down here below, the price pressure momentum indicators. They're all accelerating back down. In fact, the PPM1 is at a new low, so that represents this red line. This says that this line is accelerating down toward prices, and until this starts to decelerate, this will be the top end of this chart. So right now it's 2806, and I just want to see what it's dropping per day here. About 50 handles per day right now. And if you watch some of the videos, you've been on the channel, you know a few days ago it was about 35 handles per day. Now we're at 50, so it's accelerating again. And you know, every time it looks like these PPMs want to set up some kind of extreme low, we get another acceleration. So the realities of this market is we're in big trouble here. So I see, Jake, I see your comment. It was just at a shop. No gold left, 300 silver. Dealer said U.S. Mint no longer can mint coins because they're out of chemicals. So yeah. So anyway, yeah, and we are seeing. Let's take a look at gold because that's been under pressure. So we're seeing a rebound in gold. It's up $53 right now, up 3.5%. So there's definitely some flow going in here. And it's interesting because this is the pattern I talked about in gold. I'm just kind of all over the place here, folks, just looking at some of these comments that are coming in. But this pattern is exactly what I was talking about, is from a standpoint of what my expectations are. Let me draw in something here real quick. So this was the gold pattern that I was talking about. We were up here 4 or 5 days ago. I said this is not the breakout point. We should have one more move down and could go as low as the 200-day moving average. Look at that. Right smack on the, went through it by a little bit. We closed above it, and that was that. So we've got an inside bar going. There's probably these moving averages are not rolled over as much as you would expect. So we could see a rebound all the way back to 1600 easily on gold. But there's a but. This market's not going to run away. So there's some cheap prices maybe to grab down here. They're still relatively cheap, but prices below 1550 are going to be bargain prices probably. But this market is not in any position to be running away to the upside. We could go as high as the 1620 levels. We get back above 1600, but there'll be some sellers out there at some point when that comes in. I'm sure if you want to buy some gold, though, there's somebody that'll sell it to you. It's out there. There's plenty of it. But the bottom line is, you're seeing all these crazy pictures from the internet with, pictures from the internet that are showing all the shelves being cleared out and all that kind of stuff. I guess the folks that live up on my neck of the woods up here in the mountains are not panicking yet, but down in the Phoenix Valley, they're getting pretty crazy. Yeah, so hey, Michael, thanks for putting a question up there. So the the Fed, so the reaction to so the question is, if you haven't seen it on there, it says, so right now it looks like the markets are falling despite the latest rate cut. So the markets are reacting exactly opposite how they reacted in the past. And I talked earlier about the 2008 situation, and this is exactly how they acted in the past. Uh, this is a reaction to, most likely, the smart players out on the street know this is a liquidity crisis. This is what I was talking about on my video the other night, is that and I just brought the futures back up. They're locked down to limit again. So they bounced a little bit and they're back locked down, or not quite locked, but they're trading at the limit. And what happens here is market participants are going to respond to this thing for what it is, which is an acknowledgement that there's some liquidity issues out there. And I talked about this. If you watch any of the videos or you've been following the channel, I've been talking about this. The market can't make a bottom until we get liquidity back. And there is zero liquidity out there. There's nothing to buy. There's nowhere to hide. Gold maybe it's hit its extreme. Maybe there's some things you might be able to do with gold now that it's printed down to that 200-day moving average. But all assets are subject to liquidation right now, and this is a complete 100% liquidation of assets that's going on here. And that's why you're seeing what you're seeing. We're trading the limit down. Now there's 300 for sale. We'll just kind of chat. So the questions are really, really good, folks. So keep them coming. Because these are, it kind of puts the broadcast all over the place, but it's not supposed to be a focus. This is what it's for, is to discuss what's going on here, what the expectations are. The equity markets are not at a bottom. And talk about something else that I talked about on Thursday night's broadcast is as we come into earnings, when we come into when the next earnings season comes out, April and May, the analysts aren't going to be talking about earnings. they're going to be looking at everybody's debt, how much debt they have, what's their ratio. We're going to be talking about failed deals. I talked about companies that have stock deals, financing deals that are tied to their tied to the uh, currency, their stock. And when certain levels happen, you it blows up these deals. Even it can trigger a point where the loan becomes due if they drop below a certain value. Those type of things can happen, and we're going to see a lot of that. Now we've got 1176 for sale here. Um, yeah, so a couple things. I was kind of still on Michael Miller's answer, and the answer is no. The question is, do you believe the injection of liquidity we'll see is sufficient to solve liquidity crunch? And the answer is probably no, mainly because, uh, you know, had this conversation I had with my old partner earlier today was really interesting. So Dave, if you're on, thanks for thanks for some of the thoughts. But we went through something. We talked about everything. We both started in the markets in 1979, and we're talking about everything that's happened. You know, when the interest rates went in 79, interest rates went to 17%. Every event that's happened, you know, going 79, the 87 crash, and you can go through every major event, you know, the dot-com burst, the Great Recession, all of these things. These are just some of them we looked at. Every one, you could understand what the hell was going on. It was like, oh, okay, you know, they blew up all these stocks. They overpriced a whole bunch of stocks in the dot-com, and they failed. Okay, I get it. You know, the mortgage debt got out of control, and nobody had any responsibility. I get it. Everything you could go, oh, I understand how that happened. This situation is not, because of the things I talked about earlier, the numbers that aren't adding up, the other things that aren't happening are very material in the lack of understanding, okay? We don't know what's going on. You know, do 100 deaths in the United States warrant shutting everything down? Everything down? I mean, think about it. You know how much money is around March Madness? I talked about Austin, Texas. I used to live there. To shut down South by Southwest, not just to the Texas economy, but to music and to the entertainment. You know, find me somebody that wants to get on a cruise ship now. Okay, that industry, I don't know when they'll recover. Right? You can't just give these people money. That's not, I don't know what that is. We might as well just elect Bernie Sanders, right? And just everything's free. Give everybody $1 million, and you know, we'll turn into the movie Wall-E, if you're familiar with that. You know, that's where we're heading. Nobody has to make any money. We just kind of sit around and do whatever we want to do. Not realistic, not going to happen. But this is how crazy this thing is from that standpoint. I just feel like there's, you know, the lack of liquidity here is just appalling. We now have 2,000 contracts for sale at limit down at 2567.50. Okay. And over, if you look at that number, if you got a big enough screen, I don't know what you're watching this on, but it shows 2,000, 25, 21, 26. So some are trading at the limit. I don't know who wants to buy these things. I guess maybe if you're short and you're just going to take a few in to take profits, maybe those are the folks buying. And that's, by the way, that's the next craziness we might see would be, the next craziness will be that they halt or disallow short selling. And listen, right now, the only guys that are buying this limit down right now are the guys that were short. Nobody wants to own this shit. Okay, nobody. So the only guy that's willing to buy that right now is the guy that was short from above. He goes, "Hey, I'm going to take him the limit down. I don't know if they're going to stay down here, go lower. I don't care. I'm taking my money." Those are only people buying it. They do add a lot of liquidity. So if this thing comes off the low, the bounce will be driven by those folks. So now we're at 1,000. We just cut the selling pool in half. So so yeah, and yeah, I hear you, Jake. I haven't bought into that stuff. I think that several independent labs have confirmed is as offensive uh, weapon. It may be true, and I've talked about this before, and that's why I think it's potential that the Chinese are also selling selling treasuries. But think about this. You want to overtake your enemy. You don't want to. You want to be able to have something left. They want to take everything over. The Chinese have a big, obviously have an agenda, and their agenda is they are building ports and getting alliances with people like Venezuela and Iran and other rogue nations. That's kind of where they kind of hang out, and they're easy. It's easy to for those people to take on the evil force to come in. Um, but yeah, anyway, I'm still watching the numbers. Maybe they get bigger, maybe they don't. Um, you know, uh, it's it's just one of those things that we'll have to wait and see. And I think they've shut everything down, so maybe because this is like the TARP situation. This is the QE program. We'll never know if the banking system would have been able to survive on its own without its help. And it's possible that um, it's possible that if they had done nothing in the Great Recession, 08, 09, that things would have worked their way out. Maybe, maybe not. We'll never know that because they did what they did. Same thing here. We'll never know if this, I think his name, I may pronounce it wrong, Fauci, the, uh, the guy that's on the coronavirus team for the administration, he's the guy's smart. He's really good. And he's saying pretty much the opposite. Maybe they're there, hi, we're the government, we're there to help you kind of guys. But the message that they're putting out there is they're trying to flatten the curve. There's going to be more cases, but they're trying to flatten the curve. Like I said, meanwhile, I forget this thing. There's a couple other uh, viruses out there that are way worse than this thing. But, you know, they even know something we don't, or they're using it for another purpose. So we cut this offer down to 1,000. It's back at 24.40, and we've traded 27.46 at limit down right now. So somebody had a question. You think the future is open limit down on Monday? Highly likely. It's impossible to wonder how or to figure out how these things are going to go because there's just no way. The bottom line is, and as anybody's been hanging around me, I did for our advisor clients. It's been 3 weeks ago or more now. I basically, you've got to be out of this thing. Clients shouldn't be exposed to this kind of stuff. And it was obvious that from a technical viewpoint and a quantitative viewpoint, there was something going on. So you have to respond to that. And sometimes you don't find out what the fundamentals are behind it till later. But the bottom line is, we found out, and the fundamentals still don't make sense. What does make sense, the reaction to the 100 deaths and a few, whatever, 10, 20,000, whatever the numbers are out there, and 340 million, it's a joke, but the reaction to it, the shutting down of all of the cash flows in this country, the shutting down of industries, or in some cases slowing them down, is got a massive effect. And that also causes dislocations. Think about all the small businesses that are shut down. I saw in France, they've shut down everything that is non-essential. So I suspect that's like non-essential, grocery stores and I guess maybe gas. I don't know what's non-essential to them. But every restaurant, every other business, any kind of nightclub, bars, restaurants are done. you know, what's the effect of that, and how many of those business owners actually survived this? So I don't know. You can go down the catastrophe. Yeah. Okay. Okay. Michael Miller. Hey, thanks for commenting out. So he's in Germany, and that's so. I'm sure I'd love for you to comment more on that, but it's exactly what I was just talking about. He's confirming what I'm saying here is that everything has been shut down. So this in itself is going to cause all of these things that are happening. And I will give Jay Powell, Chairman Powell at the Fed, at least to step up and do this, because they've got meters. They can see all the banks and the liquidity. And what they did was an absolute put them at zero, put the rates at zero, add 700 billion. I was just talking to my old partner Dave a few hours ago, and I said, you know what? They're probably going to have to do another QE for 700. Was exactly the number, only because that was the number that happened the last time. Let's go back over to the other screen, take a look and see. Gold is fading a bit. Let's put gold up in like a 5-minute graph so we can see what's going on here. Yeah, so it peaked out and just fell out, got up to 1570. It's already 47 last. Who knows? I mean, Bitcoin's almost back to where it was, starting around 5,100. Everything's fading again, and this asset sale is continuing. I think I got some currency trading going on here. Just taking a look at a couple of things here. Yeah, we do have, I don't know if crude's open yet. I'm just trying to see what's ticking over here on my right-hand side, what's moving. So gold is sold off a little bit. So it's probably, well, there's no, I guess, I'm sorry for stuttering, but this is one of those situations where there's no way to figure out what's going on. And that's why you should not be involved with this stuff. It's that simple. All of the passive investors in the world are in big trouble. And, I've been, I know I've got several advisors that are customers or past customers on here. I've been trying to tell everybody this stuff for years. Like, don't take, even though you live in a gated community, keep your alarm system on. Have a strategy. Everybody fell back into the pattern again. The patterns recreate themselves over and over again. So what? All of a sudden, this is what happens. All of a sudden, and I'm gonna bring up something here, and I'm just bringing it up on the other screen. I'm gonna bring up some of our software. What time is it getting to be? About quarter till. So as long as the questions come in, I'll keep going. I'm just lighting up our Portfolio Expert software. I think there's a couple of things I'd like to show you. And, because of what's happened in bonds, I did a video on my channel, it might even be even a year ago. And the title of the video was Why Investment Advisors Should Never Do 60/40. And you just found out because they crushed the bonds in the last couple of days. So if you're using AGG or something like that, and they're going up against another basket of so-called diversified, which isn't diversified at all, is all of a sudden every asset is collapsing. That's what I'm just putting the screen up on the other side. I'm gonna bring it up so you can see what I'm talking about here. What I'm gonna bring up first here is what's what 60/40 looks like versus. Yeah, let me bring this over on screen. So this is our modeling software. The green line is the S&P. The blue line is a 60/40 strategy, which utilizes Vanguard total bond versus the S&P SPX. Okay, so there you go. So you got BND versus SPX, and you see the collapse in the 60/40. It did absolutely nothing in it, and you can look at all of these other declines. Even going, this goes back to 15. Um, I think I can go back to 2000 on this. Let me just see if I can go back. I believe I can. Yeah, it goes back 2000. Let me just adjust one thing here, but the timeline's the same. But this just demonstrates how ridiculous this strategy is. And so let's go custom. So we're going to set this back to 1/2/2000, and then we're going to come up here to 3/13/2020. So 60/40 did do really good, but I want to show you something. There's a break, and this happened in 2014 and 15 is when the markets made a shift and the S&P became the dominant player in the world. So 60/40 did keep you above the declines. And so because it added some value back in '01 and '02, then it added some value here. But now all of a sudden we're seeing, I think I can maybe collapse this out. Let me see if I can't get it to where I need it, get it. Um, oh, I know how to do this. Okay. So yeah, so what we have now, you can see that the S&P collapses almost caught up with this. So you have almost the same downside, and the same thing happened here in 2018. But the shift happened in 14 and 15 when the S&P started to dominate. And this had to do everything with the concentration in SPY and these indexes with the large cap tech stocks that started to rule. And all of a sudden you see the upside is very limited. And if I go back, let's go 5 years, just go back, you'll see that it was right in 14, 15. There was a little bit of value. Then all of a sudden, all the underperformance happened going forward. And now the downside, so you got roughly 60% of the upside and 100% of about 85% of the downside on this particular sell-off. On previous sell-offs, you actually had a buffer. And this change in those that watched and read my commentary over the years in 14 and 15, there was this shift that occurred. And this had everything to do, a lot to do with the indexing and the passive investing that came in, because all of these ETFs were driving the large cap. And I've got another chart over here I'll show you. And this is a really good sign. I believe this right here. Yeah, so this chart I'm blowing up full zone here is the monthly graph of the IJR versus SPY. Okay. This shows you the collapse of the differential of the two. So small caps are still remaining out of favor. I had talked about 6 months ago that I thought when they were up here a little ways, a couple notches above up here, that they would be the leaders on the next market rally. Well, the next market rally happened and they got left behind. But this is just a further sign of this concentration bid that exists out there. So let me go back over here. Um, so what you really want to do is you don't want to do any of this stuff. You want to actually apply. You want to apply uh, this strategy. This is a much more stable strategy to apply. So this is exactly what you want to do. And in fact, that's not the right portfolio. Hang on. This. Yeah, so I just have to put 60/40 back up there 1 second. There we go. So the pink line is a managed strategy, which is going to cut off volatility. That's currently in cash. So you can see at some point you cut it off. And this is what I was going to is by using these static passive strategies, you're always participating in these markets. And sometimes these events that happen in 14 and 15 and how the overperformance and then it caused massive underperformance. And then we saw also a lot of things happen with the bonds. If I'm right about the bonds, this is not going to be a nice ending. Okay? This just isn't. So anyway, I think I went on a good enough rant. I haven't looked over and see what kind of, if there's any questions coming out here. Let me take a look over there. No, it's been pretty quiet there. So let's go back over and take a look at, we're down 3,568 for sale at the limit. And these are it was funny, last Sunday night, I just hadn't seen this thing do this, so I'm going to bring this full screen. You can see how we just got into a flat line. I thought my data feed had been interrupted, and it wasn't my data feed, it was the market, it was disrupted. So we've got 3,500. I haven't been watching the pools here, but the other day it got up to, like I said, around almost 6,000. So that was pretty much it. So, yeah, Jake was, I didn't see your message earlier. If we go, yeah, if we go back, he was saying to set it back to '09, and you could see the performance. But the bottom line is, a lot of strategies that are being offered out there right now are just really bad ideas. Okay, and the bad idea is you're better off. And I've read 1,000. Okay, exaggerating. I've read probably 20 articles talking about how theoretically customers are willing to give up performance to protect their assets. And that would have everything to do with anybody that's ever sold or bought a guaranteed annuity, right? That's the whole point of those things. And sometimes they're good. It depends on what they are. There's good ones and bad ones. And there's right people and wrong people for those kind of strategies. They can be very expensive on fees and all that kind of stuff. But the bottom line is that's why people are willing to do those things, for that downside protection. So, these are always times, we talk about having an adaptive strategy to utilize for managing money, because when things are normal, meaning volatility levels and they're reasonably predictable, all the markets go up together. So a pie chart would work really, really good. Okay. And then, a 60-40 strategy worked pretty good. And it's the old saying, it works until it doesn't. Well, it doesn't now. And so going forward, I'm going to have a lot of solutions for everybody to be thinking about and how to move forward. Those of you that are on this line right now and are watching are aware that we came out of 2008 and 9 and basically 2009 came up with a uh, multi-cap GARP strategy, which is growth at a reasonable price. And we haven't seen value in this market for a long time. So I am working, it's not, there's time to figure this out. And I am working on some strategies for us to implement when it's time to get into a recovery. And you may be able to do some of this stuff with ETFs, but most likely you're going to want to be in individual symbols rather than uh, being at those other places. So let me just see if I can find something here. I'm hoping that our dashboard has been updated. Answer it is. So let me bring over our website real quick, and I'm going to bring this up full screen so you can see this. So we had a huge round of selling, basically been net sellers since uh, early February. There was a little bit of buying, but it was immaterial. It was mostly bonds, by the way, that was getting bought in here. It wasn't equities. So we had a huge tranche of sell orders last week. Now we just had another tranche. So we've had 10,000 trends get kicked out. The chart below this shows you this is on an equity basis. All of a sudden, we are at 29%. Last week, we were at 40. Previous week, 42. So this thing has been just plummeting. And you're going to see also the amount, this is stocks within these sectors that have rolled over. And um, yeah, so you can see everything's going on. And we're working, we actually have a new website coming around. And some of this information, which is pretty generic, is going to be available to anybody. We'll let you know when that happens. But you can see exactly where those orders are being sold. So these are optimized 3,800 orders that are sold to our optimized model. So you can see down here exactly what's being sold and what the percentage is, but it's pretty across the board. There's still specialty retailers that are hanging in there. They're still 63% long. So there are some spots that everybody's not getting pegged here. Diversified trading and distribution, that thing's 100%. But for the most part, you're seeing red across the way. Now, utility stocks got hammered. Look at this. Utilities multi-line is down to zero. So this is the bottom here. There was actually interesting. Natural gas is actually doing pretty well. I saw a guy that was a gas analyst talking about this the other day, and it was that natural gas now is actually the only type of energy you want to run. So we haven't talked about this, so let's go ahead and I'm going to go back over to the trade station. We're going to try to wind down here. Um, I guess all we have 3,559 for sale at the moment. But I do want to take a look at crude oil. And I'm going to do a full show here shortly. I'm going to go home, leave the office, catch some grub, and then come back. And then in the next few hours, I'll have a new video out there. But this is only a 5-minute graph of this. I'm not sure when energy opens. It doesn't appear to be open. But I do want to just bring up this, that I think this is going to be a right shoulder. If they don't take out the low today, then they're probably not going to. And we could see, I guess it is trading. Hang on here. Yeah. So it is down 1 point. So this is today's activity. We see this very last bar. Still think this gap will be filled, but right now you got this PPM1 is minus 2.98%. This moving average right here is going to be the top end of the line. So you're going to see a lot of resistance here. And yeah. So it's been an interesting day. We're right at 1 hour. It's kind of what I promised. Let me just see if there's any questions or anything out there. Yeah, so Greg wanted to know if we could talk a little bit about the banking sector. Jake had an interesting comment, and Greg and Jake, both of you I've talked to a lot, but I haven't talked in an open forum like this about this. But I have been saying that that's what they want. They want martial law. Jake is saying there's some National Guard to oversee grocery store distribution. Interesting. Inside leaks are now saying Trump will declare martial law tonight. And I said this 5 weeks ago, that the Chinese model is what people have, that's what they've been going for, is the martial law model. So Chinese demonstrated the entire martial law situation. So that's really interesting if that comes to be true. And like I said, the numbers don't add up. I know they just don't add up. So, yeah, so I always tease Jake, maybe reads a little too much Zero Hedge, haha. But there's this is an amazing time, folks, and I'm telling you, I don't know what's going to happen. People have asked, will we open limit down? They declare martial law. You betcha. The wheels are off the track. Okay, train's off the tracks now, and short of being 100% in cash, then that'll be the next thing. And Greg's asked me to cover the banking system. There's not. I need to do some study on there because they haven't been on my radar. So I will definitely address that, and hopefully I will try to, if I can get some information, I'll talk about that on the broadcast later tonight. So, but yeah, so no, this is crazy times. There's certainly, yeah. Sorry, Jake, that's pretty funny. But anyway, I really think this is one of these times, folks, that it's okay not to be involved. And one of the hardest things, I'm a ex-floor trader. I've worked at hedge funds. I've been an institutional rep at a major wirehouses. I've been an analyst for a firm with 4,500 reps. I've been a head financial analyst going back in my career. And I'm telling you, telling you folks, I've never seen anything like this. Nobody ever has. And going to, this is going to be a very interesting time. I'm thinking it, so I'm going to say it, but this is something that could throw this country into a depression. And I don't know what comes out of this. It certainly appears to me, I keep telling Jake, I hope he's wrong about the numbers on this coronavirus. I really hope he's wrong because, it's catastrophic what he's talking about. So it's a scary thing, especially for a guy like me. I'll be 68 this year, and I'm a diabetic, so I'm like a target for this stuff. So hopefully it doesn't get me. I'm being extremely careful where I go, what I do. But anyway, and I have enough food for about 3 months, so I'm good shape. So I go from my office, which I'm the only one in here right now, and I'll be the only one in here any day right now, so it's all good. But I'll take a look at the banking systems and all that kind of stuff, and that's going to be my focus, by the way, just to close this out, is going to be the banks, the bond market, debt. That's the only thing that matters now, folks. It's not about equities anymore. It's completely, equities have been demolished. Maybe they keep going. Maybe there's another 20 or 30% down. Right now, equities are off the radar screen. Shouldn't own anything. There might be a couple things to own, but is it worth it? Probably not. Maybe on a small scale, it's okay. But the bottom line is that it's now about debt. So, yeah, and so that is. Thanks, Jake. You'll hear this about 20 seconds from now. But I actually take a bunch of stuff for immunity and all that, and I think a shot of whiskey sounds pretty good about right now. Anyway, folks, I appreciate that. We had a pretty good crowd for just kind of impromptu, and this thing will obviously repost when I'm done. But please make sure you subscribe and hit the bell, all that kind of good stuff, so you know when I post these. And there will be another video, which I'm going to attempt. I usually on Sunday nights, usually a more detailed video, but anymore, I can't seem to get what I need to say out in fewer than 30 minutes, 35. So I suspect it'll look something like that as we get into when I go to do the videos later tonight. I'm going to hold off for a little bit because I want to actually see how this thing goes. Bringing up gold for a final look here. Yeah, so Jake just made another comment, and in that this is how it was supposed to look. The Chinese military was shipping semi-trailers full of this stuff to bases in September of last year. And I've seen some other reports that said that they protected their military and army, and the second they were all prepared and the virus started to spread in Wuhan, they launched the martial law. Yeah, this doesn't surprise me at all. I kind of believe that, and I believe the same. I don't know what the world is trying to show us right now. I really don't. I have no idea what we're trying to see here. I would I would just say that whatever's going on, one of the guys that works for me, I made a comment about 6 weeks ago when all this stuff started to emerge. I said, what are they really doing, and what are they trying to hide from us? What is that? I don't know. This is, it appears to be a way over response, and I just hope and pray that Jake's not on some of the things we've talked about, that he's wrong. And I don't want to believe he's right, but you never know. And Greg, I don't know. All I have is the cash market here. I'm sure you can Google the symbols for the Bitcoin. But this is Bitcoin. This is exactly what happened. Bitcoin rallied up. It spiked. And now it's back down. It actually printed 3,800 the other night. And it happened while I was sleeping. Or I might have picked it up down there. Somewhere, I believe, just for if there's any Bitcoin folks on here, somewhere around between 48 and 4,400 is going to be a spot. There's going to be pretty good value here. And because we traded 10,500, I believe, not that long ago. If I put this on a daily chart, we'll just finish here, and then I'll talk to you folks on the weekly broadcast that I do. But if I put this up here, what did we get to? We got to 10,514. Yeah, so Drew, got your message. Yeah, the countries probably will stop. I agree. How high gold's going? Not at the moment. Not there. It's certainly at a good value, and we'll see later. I've been a big bull on gold for about a year and a half, but they've pulled the carpet out, and the problem is everybody's liquidating assets, and and that could be a really good idea. And but for right now, just kind of looking at, here's a chart on Bitcoin just to finish that thought. Is you see the collapse in prices, and this happened. That this is in the last week, and so we went to 10.5. The low here is 3,900, depending on the service. I use Coinbase to trade, so you're likely to see some stuff. Yeah, yeah. So I'd see. Hey Drew, if you look at the comments, you'll see Jake just said you're correct. Fed coins coming 30% back into gold. M1 is key figure. Circulating new gold price, 12K an ounce, or so it's assumed target. Sounds like Jim Rickards stuff. But anyway, we'll see. Okay. Right now, you don't want to be locked to anything. They need to probably print all the fiat currency they can go right now, and they don't. Maybe they'll do a Fed coin. We'll see. Will anybody buy it? I don't know. We'll see. But anyway, like I said, that's good. There was something else I was going to go to. Yeah, so that's the other thing. A couple things here. Could get on a big currency rant here. I'm kind of a somewhat of a historian on currency. Unfortunately, when I moved, I lost my currency collection, which I actually had a $100 million bill from Budapest. It was the coolest thing ever. It was so colorful. And one of the things you always want to watch for, and we did this a few years ago, is when you start to see colors in on currency, it's always a sign. When they change a currency, they paint them up really pretty. That's a bad sign. There's a devaluation coming. And we did put some kind of background colors in the U.S. dollar and some holograms and all that kind of stuff for counterfeiting purposes, supposedly. But this, if you look at the surge in debt that happened around those same times when we started to see stuff. When Obama was in presidency, he doubled the national debt. All this stuff started to happen during that period of time. So let's do this, folks. I could go on forever. I don't have any info on Goldman U.S. coin. Hey, Jake, if you hear this, I know about 30 seconds behind. You might have some thoughts on that because you probably follow that stuff more than myself. For the most part, I am the traditionalist. I've been around these markets a long time. I do enjoy trading Bitcoin. It's been very good to me. Um, there are a lot of markets that are good, and right now, my general belief and my general thoughts on these markets is just virtually anything is dangerous at the moment, and there's not some magic pill or place to stick money. Um, you know, the most that I'm worried about after the Fed's action is our money that's in the banks even safe, right? So we're getting to that point again. Everything's happening so fast. I talked about this on a broadcast, like, hey, the banks are going to be the next in play. And that's pretty much what's happened. So um, anyway, folks, this is fun. I've enjoyed doing some of these live and having the interaction with you, with everybody. And I think it's good. It's wonderful to talk out. It kind of flushes out a lot of thoughts that I have, because when I do my normal broadcast, I try to focus in on, 3 items that are important, that are going to affect. Right now, if you're in a market, you shouldn't be. Get the hell out. Be very careful about just about anything um, that you touch. The other issue here, and I threw up here my favorite stock, LPL. This stock is traded down. It's going to be lower the way this thing's trading right now. And the realities are all of the brokerage firms are going to also come into focus. I've been through the 87 crash. There was a mini crash in 89, and in 87 was the clearinghouses were at risk. There's several clearinghouses that are at risk, and one of my buddies off the trading floor, everybody ran down to the Federal Reserve to set up a direct deposit account, and actually got zero interest in 1987, by the way. But they just wanted their money out of the banking system into a safe place. So, you know, the bottom line is we're going to see things probably we've never seen, but the brokerage firms are at risk, every one of them, and we need to watch these guys close. I talked about this the other day. It just seems like I can't end this broadcast. I talked about this the other day, that mutual fund companies are in trouble. I don't know what, let me just look up something. I'm going to put this stock up here. So this is BlackRock, okay? And I'm telling you, all of these guys, they've already been hemorrhaging money, and this is the monthly graph of this thing. This thing will head for 250. It's going to get cut in half. These stocks may catch their breath before then, but these stocks are going to get hit bad. So maybe I'm going to answer. Goldman's already hit their 200-month moving average. They bounced a little bit. Telling you, all of these brokerage stocks, the focus, you got to look at some of these, and I'm hopefully I've got some smart heads out in the field that can help me out with some of this stuff. Is that we need to be watching out for brokers, clearinghouses, debt on the books, this stuff. I don't know where the safe haven's going to be. And what the live broadcast I did, I think it was Wednesday night. Somebody brought up the capital controls, and that could be the very, very next thing as they start restricting how much you can get out of the ATM. So don't be surprised if that happens. And they start, this is where this thing's going, by the way. I hadn't even thought about that. So now everybody on this broadcast is going to run to ATM, right? But the bottom line is, this is, that's where this thing could go to, where if people start to freak out and start to take money out of the banks, then they're going to freeze them. And this is my point about this, is that once they put capital controls on, they don't take them off, okay? And somebody was talking about a buy-in where they literally took depositors' money to buy in these banks. I think it was Cyprus that did this, and probably a lot of you folks on here don't know who Frank Zappa is, but he did a song "It Can't Happen Here," and it's an old LSD acid song from the 70s, and I always think about that song when things get like this. People say it can't happen here. Well, it can happen here, and that's definitely what's going on. They go martial law. If Jake's message on here is right, and there is going to go martial law, and they're going to start, there's going to be caravans. Who knows? Yeah, like I said, I can't get off here, but it's engaging. So the Dower. So this is a monthly Dower. It reversed pretty good. The question is, this is the question, is the Dower a safe haven currency? Will that be what happens, or does it get liquidated? This chart would argue that maybe it would be a good place, but this isn't trade. Yeah, so let's see, is this today? So this is, it traded higher. I think until we see this open, I don't think I can answer that. But it's going to be, the questions are going to come into play on the Dower. Is the U.S. debt, the banking system, debt in general? I'm telling you, folks, I'm not bragging, but I've been able. This light went off the other day when the Treasury started to sell off. I said I would bring those up. You put the Treasuries here, and they just skyrocketed. When you go from 0.49 to 0.95 in 3 days, 4 days, that's a big deal, especially in Treasuries. Treasuries are like 30, the market's 30 times bigger than the equities. So, yeah, so, Drew, you're hammering at it good. It's good, man. But, yeah, like IMF, they're irrelevant. World Bank, who? They don't have a response. IMF hasn't been around been right about anything since in the 42 years I've been in the markets. But yeah, so I don't think they have any response. They might have a verbal response. The Fed is the master. They're the puppet master usually. But we'll have to see how this thing plays out. This is one of those events that you need to be a spectator and not try to participate with any serious money. This is a time to protect your assets. And if you're not protecting your assets, then you're going to get in trouble really easily. And, I know of a lot of people that are in trouble. And if you get a serious panic going on the equity markets, which is possible, I'm going to bring up, then this decline is halfway maybe. I talked about this the other night. We could be heading back. I said it wouldn't happen right away. It would be more methodical, but it may be not. We could be, in 2 months' time, we could be at 1600, which represents the highs in 2000 and the highs in '09. They were 1575 roughly. I'll round it off. And we could be heading right back to those numbers. You know, we've had questions about gold. What is there going to be an asset that's going to be a place to go? I don't have that answer. I wish I had the answer because I'd be putting some money in it, but I don't know. I don't know that at all. And yeah, so I'm just, I'm not trying to create another panic, but need some cash off the books. um, yeah. So, oh, by the way, the other thing, I'm looking at Jake's questions here. The other thing that happened is that I forgot. Okay, this is amazing. This is huge, what I'm about to say. The other thing the Fed did is they took all reserve requirements off of the banks. They have no reserve requirements. So if you think there was $1 for every $10 that are deposited, now there could be $0, 100% leverage. Think about that one. That's mind-boggling. I can't even wrap my head around this. I've been a Fed watcher. I've studied the banking system for 40 years. I ran an operation to help mortgage bankers hedge their portfolios and their pipelines for many years. Yeah, so that's a mind-boggling thought to think that there's no reserve requirements. Boy, I could go on because Paul Volcker did the opposite. He actually raised the requirements. So, yeah, folks, this thing's in big trouble. I'm going to take off of here, and I'm going to go grab some dinner and watch this thing somewhere on West Coast time. So somewhere later tonight, probably between 8 and 10 o'clock tonight, I'll have another video, which will be the official video, which will hopefully have some coherent thoughts in these different markets. So once again, thanks everybody for watching. I really appreciate all the questions and the engagement. It's been excellent. Have a great evening. We'll talk to you on my video later tonight.